the week before when I started to trim, it was like, oh, how dare you, blah, blah, blah. And I'm like, well, I don't know if the smartest people are selling. Maybe it makes sense to sell. So I started to trim, and I'm so glad that I did, because it was, 10 days ahead or a week ahead of all of this craziness. Now look at what's happening in the markets today. People are going massively risk off. There are almost 500 stocks that are off 30 or 40% in the last 30 days.
Yeah.
But the stock market is still basically at all-time highs. So think of that for a second. So everybody that thinks that the stock market is doing poorly is wrong. It is doing exceptionally well. It's just that the 400 stocks that people in Silicon Valley really care about have been getting kicked in the teeth.
Yeah.
And the paper company and the specialty chemicals company have actually done reasonably well, which
Airplane
are nothing,
parts and
which is nothing that any of us have exposure to, or some of us don't have exposure to. So now we are in a moment. There have been 71 or 2 of these moments since 2009, where you have either a sector drawdown or a market drawdown. In this case, we're in the middle of a massive growth sector drawdown. Okay, the multiples on these companies are shrinking. Companies like Snowflake and
Peloton,
Cloudflare,
Zoom.
We're trading at 70 to 100 times revenue, and people are reevaluating whether those multiples are worth it, irrespective of the quality of the company, because those are very high quality companies. So we're just re-rating the risk right now. Okay. And it's not broad-based. The real problem is all these companies that I think raised a lot of money in private markets are now going to get stuck, because if the public markets have compressed multiples by 30 to 50%, they are the ultimate buyer. The idea that you can wait and then go public later may not stand to reason, especially if inflation really keeps these multiples in check. And so all these private businesses, and then all of the ones that sort of were planning IPOs in the next 12 to 18 months, are probably in a little bit more of a challenging spot than they were before.
And Chamath, I mean, and for all you guys, it seems to me that this time what's going on is a devaluation that doesn't have systemic risk attached to it. If these multiples all
I don't know
compress,
about that.
We had this happen in 2018, because in 2018, it looked like there was going to be inflation. Powell, basically killed the market. He raised rates. And then it turned out he was completely wrong, and China was okay and everything was fine. And then the market just completely violently snapped back. Again, this is what I'm saying, which is it's too early to tell whether this is just a short-term opportunity for people who have made a lot of money to de-risk. And again, Satya Nadella just sold $300 million of stock.
Wasn't it half his position? It was half of his position. Yeah, I mean, that to me was significant.
Elon Musk sold, $10 billion. I've sold almost I think $600 or $700 million worth of stuff this year. Like, this is what I think smart market participants do. You don't just wait and just try to market the last tick.
Is there a path to unwind it? Rich people not having their equities be worth as much, then maybe it trickles down. I don't. It's unprecedented, right?
I think what happens in the stock market is absolutely irrelevant. It doesn't matter. I mean, we focus on it a lot, but when we talk about the core structural economy, the stock market is a lagging indicator of a whole bunch of things. Sometimes it's cash flow. A lot of the times it's emotion.
money supply.
I think that there's a much more important thing which we've talked about, which is that, we have said, and I have said, that coming out of the pandemic, we are moving the world back into a more, decentralized place, right? The centralization was this just-in-time, single supply chain, single point of failure existence. And if you look inside of China, the thing that they want more than anything else is to become even more centralized, right? I don't know if you saw today, but there was an article in the Wall Street Journal about how China is going to create basically an overall holding company to own all the rare earths that are made inside of China, and then to apportion them out as they see fit. So the government will now control a critical element in supply chain into climate change. Okay.
So basically, they're creating their own OPEC in a way, like their own version of.
It's a very good way of saying it. Exactly. So China is pushing more and more for centralization. So for example, myself and Fortress, we did this deal a year ago to bring this company public called MP Materials, and the whole idea was to start to build diversity in the supply chain, to build a decentralized supply of all kinds of things. In that case, it was around these rare earths because we saw this thing happening in China, okay? The problem is those kinds of investments are very much few and far between. So the solution to fixing the core structural inflation we have is going to take a decade. It's going to take trillions of dollars of investment. And more than that, I think it's going to take an enormous amount of coordination between private and public participants. And I think that that's where this whole thing fails, which is why, I'm a little bit more concerned about it. And I think I've explained this to you, but look, we have massively underinvested in the level of infrastructure we need to support ourselves.
Yeah, we outsourced it.
As in a simple example, starting in 2016, we absolutely decapitated the ability for the United States to invest in our own true energy independence. Okay. The level of fracking, the level of nat gas, oil, all of this stuff basically fell off of a cliff. And you would say, well, that was the right capital allocation decision because of climate change. Well, it turns out today, not really, because we have absolutely no investments on the climate change side.
Right.
We don't have rare earths. We don't have lithium. We don't have nickel. We don't have cobalt. We don't have graphite. So we actually can't make the batteries, which means that now oil is at $100 a barrel and gas costs $10 at the pump. So that was a coordination problem. Really, the right thing to have done would have been to continue to invest in our domestic supply chain for energy, while we also created incentives to decarbonize. So this is what I mean by these issues have been building up for years, Jason.
Yeah, decades. Yeah.
Inflation is now here. I think it's here to last. I've been pretty consistent about this. And this is the real reason why we're going to have a few years of pain. And so money losing, unprofitable businesses selling future cash flows in 10 to 12 years. I mean, some people will buy them, but I won't be.
I just sent you a link to freight rates for cargo ships coming from China to LA. And you'll see in the last, call it month and a half or so,
September was the peak. Yeah.
Yeah. So starting in April, it was $2,000 and it climbed up to nearly 20, nearly went 10x over that period of time. And then in September, it started to decline. It's dropped by 50%, and it's continuing to drop week after week right now. And we're seeing the same in lumber prices right now. I'll send you another link to how lumber prices have kind of declined precipitously, also from an early part of the year peak. And we're seeing this across a lot of these kind of supply markets where we were talking about inflation being the driver, and some of the other, a lot of the economists at the Fed and other policymakers were talking about these being kind of transitory pricing effects. And so there's a bit of a mixed bag emerging, right? We are seeing in some of these markets that prices have declined by 50, 75% in just the last few weeks.
By the way,
the supply chain distortions have sort of right-sized and the demand and the supply started to balance out a bit more. And that's creating, I think, a better kind of certainty around pricing, better reliability on these supply chains. And a lot of folks estimate that this will take all the way through 2022 for that supply chain kind of glut and mismatch to work its way all the way through to the consumer. Yeah, to the consumer. Yeah. And so there are a number of points of view that say, look, these pricing issues that we've been seeing in the recent term may in fact still be transitory, and we may see them work their way out at the end of 2022. And we're starting to see the early signs of that actually playing out. And so I would say the jury's still out. Generally, we've obviously doubled the amount of US dollars that are in supply, or increased it by 50% a year. We've got, interest rates at zero. We've got, people aren't going to reduce their wages, right? Wages are only going to go up. And there's a lot of things that you make the point of, like spending's only going to go up. The government's never going to spend less. I mean,
by the way, just on that point, the government changed their formula for what is considered a conforming mortgage. I think it kicks in January, and essentially it basically allows U.S. homeowners to have $1 million mortgage and have it essentially be conforming. Now that's like a pretty large increase. I think it's almost 20% from what it used to be. Why is that important? Think of the amount of money that's stuck in U.S. real estate by U.S. homeowners who now all of a sudden can have conforming loans that are, which used to be jumbos or super jumbos. So worse terms become better terms. You have more equity. You can pull out more money. I think that people will spend that money. And so even on the consumer side, I think that you have an impetus to spend. The one thing I wanted to say, I wanted to clarify something I said earlier. It's very difficult to buy these, long dated businesses promising huge cash flows in the future. There is one kind of version of that company, though, that you can buy, in my opinion, and what I am still buying, which is deep physical science and R&D. Because those businesses, in some ways, are still on a risk-adjusted basis, in my opinion, great bets to make. But otherwise, you want to be
ones
allocated
that are spending a lot of money on research and are going to have future products.
It doesn't necessarily have to be a lot of money, but that the outcome in success is so asymmetric. Those are really interesting to me, businesses in moments like this where if I'm de-levering my portfolio, that's how I'm thinking about it, which is I want to make those kind of bets in the future. By the way, speaking about employment for a second, I saw the stat, it was pretty insane, but about 2.1 million people under-immigrated to the United States at the beginning of Trump's tenure as president. What that means is that we lost about 2.1 million immigrants than we would have normally based on the run rate of how immigration should have worked. So whether that was people being rejected at the border or whether that was just people deciding not to come to the United States because of their feelings for Trump, we lost 2.1 million eligible workers over those 4 years of his presidency. We also had a bunch of people who had degrees in certain jobs who basically gave up on their profession. And we talked about this before, which is, the teacher who decides it's better off to just go work at Amazon, right, than to actually be a teacher because you actually get paid more now. And then the third thing is that there's a ton of people that are making an enormous amount of money through inheritance and through their parents who are boomers, who are now in their 60s, 70s, and 80s. And all of that is exacerbating this employment problem, which you can only solve by raising wages, right? There's a ton of
more people in the country.
Well, all of it just means that there are just fewer people to do the work, which means you're going to have to pay more to get the work done.
Yeah, we could let more people in the country based on their specific skills. Yeah.
You put these two things together, structural inflation is here. We've underinvested at the macro level, and we've completely distorted people's incentives to work at the micro level. Prices go up.